Welcome to Markets Now. I'm Michelle Rook with Allison Thompson with the Money Farm. And we're seeing some higher prices in a lot of the complex here this morning, with the exception of wheat. And Allison, let's talk about corn and soybeans. Down yesterday, disappointing with some pretty decent demand news. We're really kind of following these outside markets. Is that why we're up here this morning?
Yeah, I think so. Obviously, it's been back and forth on what they choose to follow. But we also are at the end of the week here, and we do have November options expiring today, which is definitely going to play an influence, I think, on where we're going to settle out for the end of the day. They always seem to go where it's going to hurt the most, especially on those option holders. So to see a decent rally here up near $13 is kind of where we were expecting that we'd see probably a good amount of hurt. So if markets can maintain these levels today, I wouldn't be surprised to see that anywhere between that 12.95 to 13.10, somewhere in there. So it's good to see a little bit of a bounce on maybe if that alone, but hopefully, like you said, we haven't seen a whole lot of demand. Hopefully we'll see some demand here next week to hold those levels going into month end. And corn there too, they have November options trading as well. So anywhere between that $4.85 to $4.95, somewhere in there, wouldn't be surprising to see us maybe close out the week there.
Do you think corn, as well as maybe gotten down into kind of a value level here? We talk about demand. The weekly exports were a little bit better, on the corn at least.
Yeah, we did see some decent demand here this past week, but I think we'd all like to see China step in a little bit more. And honestly, until something changes fundamentally, or even with outside markets, some kind of a black swan event, it's going to be really hard for corn to break its current trading range. We've seen it be maintained here for the past couple of months, and the longer those trading range hold, it seems to be harder and harder to see a breakout. We did see a breakout last week above that $5 mark, so maybe we're extending the range a little bit. That's a good sign. Hopefully we can continue to maintain the upper end of it. This week, though, we've brought us back into the middle of that range in that 480 area. So how we close out here for the month, especially with December only having about a month left to trade, it'll be very interesting to see where the trade goes from here. But again, we're just in lack of fresh news to move the market one way or another.
Yeah, it is discouraging. We can't stay over 5 on corn and 13 on beans. South American weather is also kind of a factor. I mean, things have improved a bit in Argentina, still a little bit of uncertainty about Brazil. And is that playing in?
Yeah, it definitely is. The past couple of years, all we've talked about is a drought in South America, and how that's going to affect production. And then we still ended up with record crops. So any word of rain seems to want to sell off this market, and understandably so. And I think that we did see part of that come into both complexes here this week, just because they were finally expecting some decent rains. And they have had planting ahead of average, ahead of last year. But as of right now, talking to some contacts down there in some big producing areas, they have slowed down on planting progress and are waiting for rains. And I think this morning, maybe we're getting a little bit of boost from that because the showers moving through are spotty at best. So if that trend does hold through, it could definitely affect their soybean crop, but it could also affect their second crop corn the later the crop goes. So again, it's something to definitely keep an eye out for. We're talking record production in South America. If it's anything like the US, we usually go down from there. But again, they've proved that they can still produce record crops. So it's going to need to see some type of a weather issue evolve here. And going into the end of the year, it's definitely on the trade's radar now.
Yeah. Also, are corn and soybeans getting a little support from this storm that's moving through and keeping some guys out of the field, and especially up there in the Dakotas?
Yeah, to be honest with you, we haven't even started corn on our farm yet either. So the snow is definitely not welcome. We were really lucky in being on the edge of it here. We only got about an inch, but it's wet snow, that's for sure. And it's hanging on the trees this morning. It's kind of pretty. Hate to say that. I won't tell any farmers that today. But it is going to hang on to the cobs probably a little bit longer than a lot of guys would like. But overall, I think a lot are finished up with soybeans. Good progress there. And even with the USDA report, we're 70% complete, maybe not as much of an issue there, but definitely on corn will hold up a little bit better. that way, especially going into winter now. Guys aren't too afraid to do that because we know the crop's dry and decent condition. So it probably won't be too much of an issue, but I have a feeling the snow might be hanging around a little more than people would like, especially with some inches of accumulation further west into North Dakota.
Yeah, no doubt. The other thing we should mention before we go over to wheat, we talked about outside markets being higher, and actually the Middle East war has kind of escalated here overnight, hasn't it?
Yeah, it did. We had some attacks going on to some Iranian-backed groups in Syria that the U.S. has attacked. And we did see a decent move on the overnight, especially in the crude market. We traded over $2 higher. But now this morning, we've really backed off of those highs. So maybe the trade is going to see a wait-and-see approach, see if we'll see any retaliation back or what the next step is or what other countries become involved here going into the weekend. They're taking a risk-off mode. But who knows, by the end of the session, who knows what could develop? We could definitely see a risk on mode develop too. And crude's obviously been very susceptible to that, especially with that being a big commodity in these surrounding countries around Israel. So obviously there is some fear there, but we also know a lot of those countries can use wheat as well as a politically traded commodity, and they are big buyers. So it could also affect our wheat markets, and in turn, it could affect our grain markets as well. So just remains to be seen. I know over the past couple days here, the last week, we really haven't seen too much action on any developments because they have had this humanitarian pause. So it seems to have a bit of an escalation here that things are progressing again on a war front. So we'll have to see what comes of it. And again, any retaliations or any big news over the weekend could definitely make markets exciting come Sunday night.
Yeah. The wheat market certainly isn't trading that this morning. And in fact, we looked like we got a short covering pop yesterday, but no follow through today. Why?
No, well, wheat markets have been really struggling to see a continuation of any type of support. So it has been going back and forth, but we have seen some decent support. We aren't making new lows outside of Kansas City wheat. But again, we have seen some good weather improvement through many dry winter wheat areas, and they should get their first crop conditions report here this next Monday. And many are expecting it to actually be 50% or better in good to excellent condition. And that's the best start they've had in quite a few years on the crop. So if that comes true, we could see it continue to push the market lower, especially in KC wheat. And we also have been hearing reports of some better weather not only here, but also in the EU, Ukraine, and Russia for their crop establishment as well for winter wheat. So some of those things are maybe tying up some of that rally or a little bit of incentive there to push higher. But we do know Australia is continuing to be dry. Southern Brazil, Argentina are wet. So it's just kind of a battleground right now of what's going to win when it comes to it. But honestly, we've seen some decent demand too, maybe not necessarily on our export sales reports that we would have liked, but we are seeing some decent buying. Taiwan came in this week. China's been a decent buyer. So it does tell me that we are seeing some signs of demand. And on top of that, even here in spring wheat country, we are seeing some better basis bids actually going out into the new year. Some places are offering zero to maybe even a positive basis for spring wheat. So obviously there's some demand coming down the road. It's going somewhere. So hopefully with the world of wheat, we know supplies have been tight for a while, and we're starting to hear that there is concern for some poor quality wheat or lower protein wheat. So hopefully we're starting to see some of that demand. I think we're starting to see signs of it. The market just wants some good confirmation.
Yeah, and Russia's been, so much of the problem here undercutting us. And I see they dropped their wheat export tax again this morning. So that probably isn't helping.
No, definitely not. They've definitely been the big supplier of cheap wheat, but you know what? They can't supply the world forever. So eventually something is going to change there, and hopefully we'll see some business come of that.
Yeah. Cattle market. We have been so tied to what's been going on in the outside markets, the macroeconomic fears, and then you get the cattle on feed on top of that, which caused a lot of these funds to get out. Are they done liquidating, do you think?
That's the $1 million question. We have seen a bit of an improvement, or at least coming off the lows here to finish the week, but by no means are we out of the woods yet. We're still in unknown ground. We haven't gotten any good buy signals or anything to tell us the trend has changed, and I think everybody's a bit cautious. We knew a sell-off was definitely going to be coming. We knew that, we can only make highs so many times, and we were going to see some type of a correction. And the market got it, I think, a little bit more than what they were originally anticipating they would see. But markets always seem to fall faster than they go up. So the cattle on feed report was definitely the catalyst. But there are some bullish aspects to that report as well. We're not seeing signs of heifer retention down the road. Cattle prices were really strong, and a lot of heifers went on these sales. So down the road, we could start to see that become a play as well for a little bit of a bullish sign. But we didn't see any good backup numbers this week. The cold storage report is pretty seasonal right now, so showing some slowing demand, pretty typical. So until we get some real fresh news to really support the market, it could be kind of trading in a sideways trend. We could see that continue here for a while.
I know. It's been a nice ride, though. All right. Thanks for joining us, Allison Thompson with the Money Farm, and that is Markets Now.